Hey everyone, just giving you guys a quick weekly market update. A few technical levels have been broken in the market, and that would be especially true for the cable. GBP USD had the key level at 1.2550 and 1.25 that has been taken out. This is mainly on the back of the slightly dovish comments coming out from the Bank of England. So we've got Governor Bailey saying that uh, in terms of the interest rate hikes, they are approaching the terminal rate, and that kind of dampens a little bit on the sterling bullishness. So we have actually seen the market structure being broken down for GBP USD. We've lost 1.2550, we've lost 1.25, and overnight we have seen that level 1.25 being tested as a resistance. As of time of recording, we just had that retest of 1.25 level on the Audi chart for cable. The next thing to talk about would be the Euro USD. So we still have that 1.27 1.07, sorry, not 1.27, 1.07 level holding on very strongly. And this level we saw last night that market actually broke below that level, but we see a little bit more on the buying on the dip situation for the Euro USD. So for now, 1.07 still holds as the key level for the Euro USD. The next one would be on the dollar Japanese yen. The dollar Japanese yen here, there are talks of potential intervention, but let me just break it down a little bit because we've got comments coming up from the Bank of Japan saying, like, sure, they're monitoring the movement in the currency market, but they want it to be, as long as it's according to the fundamentals, they will leave it alone. Now, the Ministry of Finance has come out and say, look, we might need to take more aggressive actions towards any weakening on the Japanese yen if the market is moving in an excessive way. But if we take into consideration what the Bank of Japan said in terms of keeping in line with the fundamentals, I think the market is keeping in line with the fundamentals because we see the Bank of Japan continuing to reiterate their intention to keep ultra easy monetary policy while all the other central banks are on the tightening process. In fact, they are pretty much towards the end of the tightening process, like what's going on with the Bank of England and potentially with the FOMC as well. So fundamentally, I don't think there's anything wrong with the yen getting weaker because people are still going to consider that the Bank of Japan is not going to be doing anything. It's still cheap to borrow from Japan, and in terms of the mechanics of a carry trade, I think that would still be in play for the Japanese yen. Now, obviously, with the Dow Japanese and with the remarks coming out from the Ministry of Finance today, we saw that dip below 147 yen, but it quickly recovered back up above 147. It does take out some stops below 147. That's why we see that trigger movement on the Dow Japanese and it dropped down really quickly. But within a few minutes, in fact, I think it's within half an hour, it bounces back up above 147. So I think we're still looking at buying momentum on the Dow Japanese, and I think we're still looking at position traders looking into getting into the dollar Japanese yen in the long run. In terms of the potential target, obviously we are within that intervention range right now, 145 to 150. So with price stabilizing and maintaining a position above 147, I still think that the market might take the dollar Japanese yen a little bit higher, potentially towards 150, before exiting out of their positions, just in the fear of intervention coming up from the Ministry of Finance. But that's pretty much it. Stances coming up from the monetary central banks. RBA a little bit dovish, but still maintaining the need for a potential rate hike. Bank of Canada has pretty much turned dovish, saying like that they might actually pause interest rate hike in terms of the tightening process. Right now, they don't really want to over tighten. ECB a little bit ambiguous. Bank of England right now sounding a little bit dovish. FOMC still hawkish by all the other central bank standards right now. In terms of whether or not the potential interest rate hike in September is going to happen, that has significantly dropped down. I think only about 10% are anticipating a potential rate hike in September. About 40% is anticipating a rate hike in November. So that's pretty much it for this week. We don't actually have a lot of data driven moments for this week. In terms of price movement, I think what we're going to be looking out for is that potential range to develop ahead of that CPI next week from the US. So I think the key market movers obviously going to come in from that CPI numbers, which is on Wednesday. So considering there's only 3 more trading days left, I think market is actually just going to wait until Wednesday happen and then decide on what they are going to be doing in terms of future movement. So the sentiment is going to be a little bit flat at this point in time. All right, with that, good luck with your trades. Have a great weekend. I'll see you next week.